Hey everyone, me Kevin here. So I want to give two updates that I thought were really incredible about this week and going forward. So one's going to be looking into the past a little bit, one's going to be looking forward a little bit. Keep in mind though, this video is brought to you by Extra, and of course my programs on building your wealth, both linked down below. Coupon code expires on Monday. Okay, let's get into this. So the first thing is looking back. So when Russia invaded Ukraine, that morning we saw some of the lowest prices in the stock market. And guess what actually, according to retail tracking data and VanderTrack, guess what actually spawned or spurned the market to start going positive? Retail trading. Retail trading exploded in the first 2 hours of that morning. And after that, and the sort of next kind of 70% of the day, that's when the institutions came in and started buying. So really interesting to know that retail was the one who led the reversal out of that bottom just a couple days ago. Quite wild. I thought that was sort of a fun fact. But I do like talking about the future a lot more, so let's talk about the future. So look, there are a lot of people right now making videos about how we're going to have all this substantially more inflation because of increased commodity prices, and this is bad. And look, my whole inflation world is, well, my whole world, I should say, is surrounding inflation because I study this every day. I've obviously migrated from camp transitory over to, okay, it's not that transitory. Now because, and we talked about this yesterday in video, because of the Russia-Ukraine situation, we know the Fed's likely to be a little more dovish, be a little more patient, wait for more data to see if aggregate demand moves down. If aggregate demand moves down, then inflation moves down. But more importantly for this video, there's a lot of talk about how commodity prices increasing and skyrocketing because of the incursion in Ukraine, that we might see this substantial increase in inflation, and that not only that, but maybe you should quickly flee and invest in things like commodities. Specifically, we saw wheat skyrocket somewhere around 15 to 20% on the day of the incursion. Natural gas in Europe spiked like 60%. It was insane. But something that's really interesting is, much like how the stock market bottomed when commodities peaked, all of these commodities have started turning, almost all of them, have started turning red after the incursion started. Literally, in the last 2 days, we've seen, obviously we've already seen oil prices come down. Remember, we hit $105 a barrel. We're down to like 98, 99, somewhere there now. And quite frankly, for Brent, it's probably going to go back under 95. If it isn't already right now. And we saw aluminum and nickel, some of these metals, specifically with exports tied to Ukraine, skyrocket. But all of them, well, with the exception of aluminum's still staying a little strong. Aluminum's up 3%. But otherwise, you've got coffee, corn, cotton, soybeans, sugar, wheat, all of these coming down. Natural gas, oil, commodities are actually falling again in prices. And this is a good sign. It's a good sign that maybe we potentially hit peak commodity fear, which to some degree commodities can serve as a safe haven. Remember that when we have uncertainty in markets, people flee to safe haven assets, which would be things like bonds, treasury bonds, precious metals like gold, and of course, commodities often, because when there are disruptions, people assume, oh my gosh, well, commodities are going to go to the moon. I mean, obviously, lumber's been going to the moon like crazy. But there's actually a bigger thesis right now around commodities that trades over, that we've hit peak commodity fear. And combined with potentially a more dovish Fed, maybe we hit a peak at commodities, and making bets on commodities right now might not actually be the best thing to do. In fact, this is why I'm making more bets. Well, first of all, the morning of the incursion, I sold gold literally at market open, because I'm like, okay, the incursion's happening. This is likely going to be peak fear. Sure enough, it was. I took my profits on gold, $70-something thousand, which I've honestly never traded gold, but I love that. And of course, always talk to course members about this, but then moved into those higher margin growth style tech names with profit. Very important right now. But there are a lot of folks speculating on commodities, and I want to leave off with one more thing. The most important thing here is to keep in mind, commodity booms tend to come in massive cycles. They come in these super cycles where commodities just go ridiculous. And there's a lot of enthusiasm, especially around lithium and nickel, cobalt, the ones related to electric vehicles, especially with gold prices going up. People are like, oh my gosh, EVs going to the moon, right? It's one of the reasons Enphase also kind of went to the moon this last week, because, when oil prices go high, people are like, oh my gosh, let's get into renewables, which makes sense. But I want to warn, I think that's short-lived. I think there's a better opportunity not to go all in here, okay? So yesterday I mentioned that I'm buying stocks again. Some people are like, oh, flip-flopping again. You can't make up your mind. No. I move with the data. As the data changes, I make changes. I'm only about 42% invested in the market right now, the rest cash. And that's because I do believe we have plenty of elements of uncertainty coming, especially around what is the Fed actually going to do. I'm leaning towards them now after this incursion, them going dovish. And some people think I'm crazy. They're like, why would they go dovish? They need to Paul Volcker us. Look, I agree. I think they need to, somewhat at least, like pseudo Paul Volcker us. Like, give us some shock and awe. Give us a 50 basis point hike. Raise rates to 1%. Come on, that's still ridiculously accommodative. But they won't do it because they have this thing now that they're promising everyone that they're going to communicate everything much more clearly. And through this increased communication, they're trying to focus on, let's just do 25 basis point hikes over and over and over again, which is fine. They might do 9, over the next, year and a bit here. And that might be priced in. But any kind of shock, there'll be fear of that shock. But I think those are going to be buying opportunities. So I'm marking my buying. First of all, I'm staying away from commodities right now. Cryptocurrencies are going to trade just like tech stocks, in my opinion. But you want to watch for buying opportunities and fear around the next CPI reports. We get higher than expected inflation, which honestly I believe everywhere everybody's raising wages much more. We just had a logistics company, somebody who worked at a logistics company, come to us and they said, so we used to raise wages and therefore raise prices every, maybe 6 months or something. We'd make a little adjustment. Now he's like, because so many costs are increasing, we're raising prices every single week just to keep up. And you're seeing prices get raised everywhere. It's pretty ridiculous. So the inflation is real. And I do think we're underreporting it. I just think we're going to have this Fed now, especially because of the Ukraine issue. I think that really puts a damper, and people don't believe me on this, but I really believe that this puts a damper on the Fed being aggressive, which was a very real risk up until about, a week ago. And so, in my opinion, that means look for those opportunities to buy under those 200-day moving averages. Keep in mind, the QQQ, we had a beautiful bottom here, double bottom. We bottomed out on January 24th, and we bottomed out again just a couple days ago. But if you look, the S&P 500 bottomed out around a similar level, slightly lower. QQQ has been nothing but straight down. So if you're in tech or profitless tech, this last low was lower. And there are still risks in 2022 where we could go even lower. So I don't want to say that's it. You got to just flip all in, start pulling out margin. Be careful. I don't think you lose being patient in this market. Be careful speculating on commodities. People talking about how commodities are going to create all this inflation and stuff. I don't think they're looking at the commodity charts because they're all turning red already. The prices are coming straight down. Yeah, and I would not be surprised, actually. This could happen too. We could see a commodities crash. And a commodities crash, ironically, do the opposite. We get a big commodities crash. What happens? Well, now all of a sudden the market's going to start pricing in, oh my gosh, this means chips are going to be cheaper, EVs are going to be cheaper, everything's going to be cheaper to make. Go long on stocks. You want to be ahead of that curve. So you want to see that curve happening? Watch commodities. Even if you don't invest in commodities, I'm not a commodities expert as well, but I'll tell you, this cycle, especially with pandemic and war, the pandemic cycle was over. You want to be paying attention to commodities. All right? Thanks so much for watching. Check out the programs. Use that coupon code expiring on Monday evening. And as always, check out mckevin.com/extra. And thank you to our sponsor. Thanks, folks. Bye.